Gold just hit an all-time high, and not by a little. Investors, central banks, and even governments are rushing toward it like it's the last lifeboat on a sinking ship. Meanwhile, the US dollar, the world's most powerful currency for nearly a century, is falling faster than it has in decades. Prices are rising, savings are shrinking, and confidence in money itself feels like it's cracking. Everywhere you look, headlines whisper the same question. Are we heading for a massive financial recession? Most people see these stories as separate: gold prices, dollar weakness, inflation, the cost of living. But they're not random events. They're all connected by one uncomfortable truth: the global financial system is shifting under our feet. The rules that kept money stable for decades are breaking down, and what comes next could redefine wealth for an entire generation. So in this video, we're breaking it all down: why gold is suddenly exploding, what's really happening to the US dollar, and whether we're standing on the edge of another recession or witnessing the birth of a new monetary era. Because behind every market chart and headline panic lies a deeper story, one about trust, power, and the real value of money itself. Gold has always been more than metal, it's emotion. It doesn't just sparkle on rings or sit in vaults, it glows with fear, history, and power. Every time the world starts to wobble, gold shines brighter. It's the heartbeat of panic and the refuge of control. For thousands of years, civilizations have turned to gold when trust collapses, when empires printed too much money, when currencies failed, when people realized that promises written on paper could burn, but gold could not. So when gold breaks records, it's not just a number ticking higher on a chart, it's a message. A collective signal from millions of people saying, we don't trust the system anymore. And right now, in 2025, that signal is flashing red. Gold isn't surging because the world feels safe, it's surging because the world feels fragile. Investors aren't chasing profit, they're building protection. Central banks are buying gold at historic levels, not because they love shiny rocks, but because they fear what comes next. This isn't greed driving the market anymore. It's preparation. A quiet, global shift from chasing returns to surviving risk. And that's where our story really begins, at the intersection of panic and power. There are 5 major forces pushing gold higher than ever before, and together, they're rewriting the rules of global finance. First, inflation and debt. Governments around the world have borrowed like there's no tomorrow. The US national debt recently surpassed $35 trillion. While it has been rising quickly, experts debate how it compares to overall economic growth. When that happens, faith in the system begins to slip. People start asking, how long can we print, borrow, and pretend it's fine? And when confidence fades, gold rises because gold doesn't lie and it doesn't print itself. Second, interest rates. After 2 brutal years of rate hikes, central banks are finally blinking. They're hinting at cuts. And when rates fall, holding cash stops paying off. Your savings lose power, and investors rush into assets that hold value: hard assets, like gold. Third, the dollar's weakness. Gold is priced in US dollars. So every time the dollar slips, gold becomes cheaper for everyone else and global demand spikes. Fourth, central bank buying. Nations like China, India, and Turkey are stockpiling gold, quietly stepping back from their dependence on the US dollar. And fifth, fear. Geopolitics, elections, inflation, layoffs, uncertainty everywhere. And when fear rises, gold becomes more than a trade. It becomes trust, the last currency that doesn't need permission to exist. Let's talk about the elephant in the vault, the US dollar. For nearly a century, it's been the world's ultimate currency, the measuring stick for value, the language of global trade, and the foundation of trust. Oil, gold, and almost every major commodity on Earth are priced in dollars. Nations borrow in dollars. Central banks hold them as reserves. It's the bloodstream of the global economy. But lately, that bloodstream has started to thin. The US dollar index has shown signs of weakness recently, prompting discussions about changes in global currency dynamics. Some countries, including China and Russia, have increased trade in their local currencies in certain deals. Reports suggest that nations like Saudi Arabia are exploring or experimenting with oil contracts not priced exclusively in dollars, though details are limited. Why does this matter? Because global demand for the dollar is what keeps America powerful and wealthy. If that demand fades, Washington can't keep printing infinite money without triggering inflation, instability, and eventually, crisis. Now, the dollar isn't collapsing. It's still the king of currencies. But kings fall when trust fades. And trust, unlike paper, can't be printed. That's why every time confidence slips, gold doesn't just rise, it roars. Every financial empire believes it's different, untouchable, eternal. But history disagrees. In the past 500 years, we've watched the same story unfold again and again. Spain once ruled global trade with silver from the New World. France followed, building wealth and colonies until its debts consumed it. Then came the Dutch, whose banking and ships controlled the seas. And finally, Britain, the empire on which the sun never set, powered by the mighty pound sterling. Each one of these powers believed their currency would last forever, and each one lost it. The pattern is painfully familiar. Step 1, a surge of innovation and growth. Step 2, massive wars and debt. Step 3, printing money to cover the costs. Step 4, inflation that eats away at faith. Step 5, the world quietly searches for something more stable. Sound familiar? It should, because the US is following the same script, just with bigger numbers and faster consequences. The American dollar may not collapse tomorrow, but history tells us no empire's money lasts forever. And that's why gold keeps rising, not as a bet against the future. Investors are protecting themselves from history repeating, from the same mistakes that destroyed past empires and currencies. Now comes the question that hangs over every headline, every market update, and every nervous conversation about money. Are we standing at the edge of another recession? If you listen closely, the signs are there, quiet at first, but growing louder every month. A growing chorus of economists believes that the next slowdown isn't a matter of if, but when. According to JP Morgan research, some economists estimate roughly a 40% probability of a US recession within the next year, though forecasts vary. Analysts at Deloitte and Moody's have highlighted the risk of a potential slowdown or technical contraction by late 2025, signaling that economic growth could be cooling. The data doesn't lie. Business investment has started to cool. Companies are scaling back hiring, delaying projects, and cutting costs. Consumer debt has exploded past $1.3 trillion, the highest in history, and more people are falling behind on payments. At the same time, interest rates remain painfully high, trapping millions in a financial chokehold where borrowing costs rise, but wages barely move. Corporate layoffs are spreading quietly, not just in Silicon Valley, but across manufacturing, finance, and retail. Storefronts are closing faster than they're reopening. Even the housing market, once unstoppable, has started to freeze. Buyers can't afford to buy, and sellers can't afford to sell. Now, this might not be another 2008-style collapse. The world's banks are stronger, and credit systems are more regulated. But what's coming could feel slower, deeper, and more psychological, a confidence recession. Not just about jobs or GDP, but about trust. Trust in money. Trust in stability. Trust in tomorrow. And that's exactly when gold shines brightest. Because when people lose faith in paper wealth, in stocks, bonds, or even the dollar itself, they reach for what's real, what has survived every empire and every crush. So yes, turbulence is coming. But turbulence doesn't always mean disaster, it means movement. And in every moment of panic, there's always a shift of power. Some people will freeze, waiting for things to go back to normal. But the smart ones? They'll start positioning for what comes next. Because recessions don't destroy wealth, they transfer it. From the unprepared to the prepared. From the hopeful to the disciplined. And gold, once again, is becoming the compass for those who can read the storm. So what does all of this actually mean for you, the investor, the saver, the person just trying to protect their future? It means your entire mindset needs to evolve. The old world, the one built on easy credit, low inflation, and central banks printing away every problem, is fading. For over a decade, wealth seemed easy. You could throw money at tech stocks, crypto, or real estate and watch it multiply. But that era is ending. The next phase will reward resilience, not risk. It's not about chasing the next hot thing, it's about holding what endures. That means lower debt. Borrowing in a high-rate world is a silent trap. Smarter investing. Focus on value, not hype. Owning real assets. Things that can't vanish in a crash or be printed away. Gold, commodities, land, productive companies, and energy. We're entering a time where boring becomes powerful. The flashy investors chasing overnight gains will burn out. The quiet ones, the disciplined, patient ones, will build generational wealth. Because in times like these, survival isn't luck. It's strategy. And the future won't belong to those who gamble. It'll belong to those who adapt. At its core, gold isn't just a financial asset. It's a mirror of human emotion. It's what we run to when everything else feels uncertain. When banks start collapsing, we buy gold. When inflation eats away at our savings, we buy gold. When the headlines scream chaos, when the markets crumble, when the people in charge sound less like leaders and more like gamblers, we buy gold. Because gold isn't just a commodity, it's a collective memory. A memory of every time humanity placed its faith in paper promises and watched them burn. History shows that many empires faced financial crises when their currencies lost credibility, highlighting the risks of excessive debt and money printing. Every investor who learned too late that digital numbers on a screen aren't the same as real value. That's why gold never truly loses relevance. It's not just metal, it's trust, condensed into something you can hold. So when people call gold old-fashioned, they're missing the point. It's not nostalgia, it's survival instinct. It's the quiet reminder that some things still matter, even when everything else changes. For over 5,000 years, gold has outlived kings, countries, and currencies. No app, no algorithm, and no tweet can replace that kind of credibility. If history has taught us anything, it's that it always repeats, only the actors change. And if that pattern holds, this gold rally might just be the beginning, not the peak. Sure, there will be pullbacks. Prices will swing. Analysts will call the top every few weeks. Panic sellers will rush out at the first correction. But underneath all that noise, the long-term message is clear. Money is losing trust, and gold is quietly gaining it back. But here's the twist. This time, it's not just about gold. It's about something bigger, the global shift toward real value. People are waking up to the power of hard assets, things that exist beyond the reach of central banks, politicians, or digital systems. Gold is leading the movement, but it's joined by silver, commodities, land, energy, and yes, even Bitcoin. Each represents a growing desire for independence, for something tangible in a world built on code and credit. The financial system isn't collapsing, it's evolving. Old money is being questioned, new money is being tested, and in between, a new balance is being born. And like every major transformation in history, this one will create two kinds of people, those who react and those who prepare. The first rule of survival in a shifting economy is simple: don't panic, prepare. Gold's rise isn't a doomsday prophecy. It's a mirror reflecting our fears, our uncertainty, and the reality that the system we grew up trusting is changing. The US dollar remains dominant, but analysts note that some global trends could be shifting confidence in it. The global economy isn't collapsing, but it's clearly slowing. You can ignore the headlines, but you can't ignore the pattern. So this moment isn't about fear, it's about focus. Hedge smart. Save smart. Think long term. Because wealth isn't about guessing when to buy or sell, it's about understanding where we are in the cycle. The first $100,000 teaches you patience, the discipline to wait, save, and build. The next era, the one we're entering now, teaches you protection, how to defend what you've earned while others chase illusions. And together, those two lessons prepare you for independence, financial freedom that doesn't depend on anyone's promises, but your own preparation. You don't need luck. You need time, discipline, and awareness. If this breakdown gave you clarity, hit subscribe, because in the next video, we're diving into the collapse of trust in money and the rise of digital gold. That one will change the way you see the future of money forever.